Hello and welcome to this course on how to read and analyze hotel income statements. This video we are going to learn about the fundamentals of accounting. So there are three key things in accounting terms which are very useful in hospitality accounting, which is called accruals, allocations and prepayments. These may be the terms which you may have heard a lot of times in the P&L but probably never understood the real meaning of them. So let's look at it. So what is an accrual? So accrual is a basis of accounting. There are two bases of accounting normally. One is cash and then the accrual basis. So what is cash basis of accounting? The cash basis of accounting recognize income when they are received or the expenses when they are paid, not when they are accrued in the same time. So there is no matching concept. You may have, let's say the guest is coming to your hotel when but they haven't paid yet anything because the booking might have come from travel agent which have a 30-day credit. So you have accrued the income this month. You are providing all the services in this month. You paid the salaries, you provide all the materials in this month, but you're not recognizing the income because you haven't collected the cash. Very bad, right? So and then same way goes for the expenses. If you haven't paid the salaries in the same month, then you will not recognize them as expenses. However, the expenses will be recognized when they are actually paid. So there is no matching concept between the revenue and expenses. It hurts the P&L when you are reviewing the expenses. In the P&L you see the expenses has been charged for maybe last month, last 3 months ago, 4 months ago. So suddenly your monthly P&L is hit by an unplanned expenses which you cannot explain. That is why we use accruals. So whatever expenses or income is recorded in the month or in the period of accounting where they are occurred, not it does irrespective of they are paid or not paid. So normally we make a accrual, we make a provision for those expenses to match the expenses in the revenue. For that we are matching the revenue, expenses and revenue. In cash basis, it's impossible to analyze the revenue, and there's an incomplete recording of expenses, and then it can be related to any period. So it's a complete mismatch. However, the accrual basis is the only basis which is recognized by the International Accounting Accounting Standards. The cash basis of accounting is no more recognized as a valid basis of accounting. And then but however there is a issue with the accrual is because you need to maintain a lot of records, or if the expenses are coming in, that even the departments have to keep a record. Operation departments, if they are incurring some expenses, have they got the bills, have they had been charged to the expenses, especially for at least the big ticket items. The finance department definitely keeps a lot of track on which expenses are occurred, which expenses are paid, which expenses are not yet paid, so that they can make accruals to match the revenue and expenses. Thank you very much. In the next video we're going to be looking at another term. Thank you.